Take gas and drive right past your hometown. Found that house you first fell in love in. Might take you. Good morning, Donna. Safe for a trip down to the Keys with all your friends from way back when. Good morning, everybody. We will get started here in about 9 minutes, right at the top of the hour with our live stream. Let me get that prep screen up so you can start looking over a few things. Turn stars on the golden California ain't close to what I got in my heart. Lord knows that luck can pick up trucks and diamonds don't come cheap. Thank God, love and sunsets free. Just like an old tree, I carved our names. This guitar that we picked up at a pawn shop on a snowy day in Denver. Slept out in a million stars. What you got ain't who you are. It's things like these that pay the most. That's all you got to give. I don't believe that money makes the world go round. You can't buy the way I feel right now. Underneath this burning sky, I'm waiting for the day to turn to stars. On the go, and on the go, what I got in my heart. Lord knows that love can pick up trucks and diamonds don't come cheap. Thank God, love and sunsets free. There's a freedom in your eyes right now. It makes up for everything I've lost. Like everything right there. To be safe right here on the world, like the colors of glory, we won't fade. Underneath this burning skyline, waiting for the day to turn to stars. I'm going to go and to go what I got in my arms. Lord knows that love can pick up trucks and diamonds don't come cheap. Thank God for faith and family. Thank God what they mean to me. Thank God love and sunsets free. Grapefruit, a bathing suit, chew a little juicy fruit, wash away the night, driving, because the tan, a little for the scene, it's good for the soul. So it gets so damn lonely when you're away alone. If I had the money, I'd stretch you in beside me and never ever leave you. At home all alone and crying. Good morning, everybody. Happy to have everybody here. Wow, just looking at the 2-year yield dropping very low. I'll touch on that when we come back in. Close your eyes and get started. Take it. Wash away the night. Just doing my final checks here before we get started. It's good for you, so. There's a place called Kokomo. That's where you wanna go. Bodies in the sand. Oh, Japanese yen coming around the far outside. If the dollar keeps going lower, the yen will get that breakout. Nice higher low. A little bit of an obstacles up here, so might be one of those little fake out breakouts. We'll talk about that in about 2 minutes once we get started. Well, make sure your stop is relatively close. All right. Let's get ready to rock. Happy Friday, everybody. Good morning, everybody. Happy Friday. Excited to see everybody here. We just got into the no, what we got? Oh, crude oil pulled back just a little bit further. Okay, we are in the Japanese yen. I do have a trailing stop on that. Looking for a breakout on this. We've got a fresh accumulation of orders. We're going to kind of hit the ground running a little bit on this. The dollar looks a little weak, and I'll come into that just a second. I do want to caution you as we look up and to the left, we want to look for any obstacles of where other sellers or even a leg base group of candles are. So my profit target will be to this leg base group of candles right up here. Okay, so my target
67135. And we'll look for that. Now, in order for the yen to keep move down, and I also want to recognize I do have a trailing stop on here, so I got that's how I'm managing my risk. Further it goes up, my trail stop will follow. Okay. Let's bring up here. I don't want to start off all over the place, but let's look around here. Now, something not quite right over here on the 2-year yield. I mean, this is a pretty significant drop. It's the second one this week of a very significant drop. Okay, I mean, big drops. And let's go back and look at a few of the other ones. This is an hourly chart on the 10-year yield. Okay, now if that yield continues to go lower, it's going to have an impact on the bonds, notes, FX markets to continue to move higher. Okay. Now, just at a glance, we can see that there is a range right here where we have some resistance. And we have a buy territory just below it. Okay, so where I expect the 10-year yield to give us a bounce is going to be quite a bit lower. It looks like we're even doing a little breakout to the downside. Okay. Now we monitor the 10-year and the 2-year yield. Okay, along with the U.S. dollar. Okay. Now, when all of these are in sync, whether they're moving down or moving up, this has a inverse reaction to bonds, notes, and so on. Okay. We also notice that as the index or as these are moving lower, that the trend started to move higher. Okay. Let me get that one changed back to the QMI. QMI is a NASDAQ pre-market indicator developed by the NASDAQ exchange to help price the open. It's kind of flat this morning. Okay. Now, what you need to know about the NASDAQ pre-market indicator, and you just have to watch whether it's gapping up or gapping down. There's not really a technical trade off of this. But keep in mind that the pre-market indicator developed by the NASDAQ exchange has a 92% correlation as to traders' sentiment at the opening of the session. Right now, if it's going flat, that 92% correlation to their sentiment is kind of like, we don't know what's going to go on. Okay. Now that's a clue. It's not a trade. Okay. We are seeing a move up on the, almost 50 cents on the volatility index. Okay. So people are getting a little bit more off of the greed and starting to lean more towards, being a little more conservative, adjusting stops and so on. Okay. Now, the volatility index is one of those gauges that we watch for and use during the trading session to see when things are, when the bigger players are starting to insure. Now, part of that has to do with coming into the weekend. Okay. All right. Pit open on the crude oil. I did take a trade earlier. I thought I got stopped on this one. All right, so taking a little bit of heat on that. Make sure my stop is at 67.27. My distal line down here. Okay. If you, I would also point out that heating oil and gasoline are both in demand as well. Okay. Heating oil and gasoline tend to lead what crude oil does. Okay. So as we look at that first open range candle, and it happens to open up inside that zone, we are now long, getting the push back up on the crude oil here. And where is that, CO?
Order filled.
All right, so I'm gonna participate in that one. And we'll take a move up on the crude oil, okay? Now, the other thing about crude oil right now is you notice that, and this is part of our Mastering the Charts Part 2 course that's coming out, is recognizing what the structure looks like, okay? Now, what is the structure? Well, it's how we watch how price reacts off of these resistance areas. We notice that there's 3 touches of resistance, which is what we use to qualify resistance and support. And then we had a low pivot point on the right. Okay, now this particular structure that we teach about has a very high probability of breaking back to the upside and then getting, just as the breakout starts to occur, we get a small pullback. Okay, so along the move up, if we're anticipating that small move pullback, you might see a little pause in the up move right around this level as it builds some more accumulation. Price pops out, pulls back to that accumulation, and then generally will continue the price move, okay? We're also looking at crude oil on a daily chart, recognizing where the 50 simple moving average is. Using our Fibonacci retracement levels as well. This is kind of a higher low at this point. 2 places that we get a little more aggressive on taking a trade long off of is the 88.6% retracement, and a little more aggressive is a 70.7. Okay. Now, 88.6 and 70.7 are things that I learned from Scott Carney at harmonictrader.com. And but I realized that 70.7 is rare when it happens. When it does, okay, it looks like we right in between those, so I can't use it. But the 70.7, you can see earlier that price hit that level, bounced right up to the 50 moving average. Okay, so higher time frame trade setups, we're looking at the small time frames to splice in to that potential move. Okay, natural gas also just opening up the pit session. And with each of these products, okay, natural gas and crude oil, when the pit opens, we wanted to look at that first 5-minute candle after the pit opens. Kind of usually, it's called an open range breakout trade. What determines if we take the trade or not is looking at the Globex range. Okay. When we see that Globex range and we compare it to the daily ATR, we are kind of close to the middle. Okay. But we also notice that the 3 touches of resistance are on the left and the low pivot point is on the right. Okay. This can also lead to price moving up, just as we described on the prior crude oil chart. Okay. So if you're okay with trading the nat gas, I'm going to watch on this one, mainly because that Globex range is within about 40 to 70% of the daily ATR. I'm anticipating a little more choppy action. Notice right when the big players started coming in and setting up their day, there is a leg base group of candles. The other thing to notice about crude oil and natural gas is that we often see some price action about 2 hours before the pit. Now, my assumption on that, I'm going to have to take this one here. We'll take it for a little one. Put a trailing stop on there. back to my comments, about 2 hours before the pit opens, we see that a lot of activity, volume picks up. And the assumption here is that the bigger players are coming in, they're setting up their morning, they're looking around at their stacks of orders that they have, okay, and then they're starting to participate and do some trades. So anytime you have a leg base created or a zone created right around that 7 a.m. Eastern time, okay, is we have to assume that some of the big players are setting up their day. Now, that's a bullish one, so that is also a demand zone. And we don't want to confuse our zone trading with a second strategy, which we're calling the open range breakout. They both give us pieces of information about the trading day, okay? Bigger players came in. We have a strategy that we use, the ORB, open range breakout, okay? Now I got a little aggressive on this one, I have to say. Usually I will back away if my Globex range is within that 40 to 70% of the daily ATR, okay? The price pattern and things that are going on outside the price chart are giving me some signals that it's okay to take the risk on the open range breakout, okay? But I need to have managed risk, okay? If price breaks the low of the open range, then we'll look for that demand zone to come into play, 3.018, okay? All right. Good morning, Callie. Good morning, Liz. Glad to have you guys here. Let's see. Back to crude oil. Okay, let's clean off our chart. What we teach at themarketinstitution.com is using patterns, structures on the price chart to anticipate the next potential move, okay? Moving price. This is our open range candle here. Now, we do a lot of information gathering, okay? And the more information that we gather, we then have to equate that information into a trade, okay? So some of the information we collect does not mean we have a trade at this moment in time. We have very specific rules that we follow as far as entering a trade and managing our risk, okay? Example here is, let's come back out. Wow. Look at the breakout on the 5, 10, 30-year bonds and notes, okay? So when we see a strong move like that, I'm anticipating that the dollar is going to continue going down. And as we talked about earlier, see the yield going down like this gives the bonds and notes a strong move up, okay? So understanding where the bonds and, the yields have a demand zone is a very key place to know when the bonds and notes may find their sellers, okay? They go inverse of each other. Now, what your job is to do is to watch and monitor them and see which ones lead and which ones follow, okay? In observation, US dollar, the yields move slightly before and give us a heads up before we see the bonds and notes move, okay? Either to the upside or to the downside. Just make a note of that. And we're also seeing the equity indexes moving higher. Let's come back out here. Yep, we had a good reaction off of the non-farm payrolls. Keeping in mind, the volume is still on the lighter side. Wow, what's going on with NVIDIA? 11 million shares traded already. Let's take a quick look at the chart. Not seeing anything really compelling on the chart at the moment. Price is not, let's see, we're down 41 cents, but that is a ton of shares being traded on NVIDIA in the pre-market, okay? So it's just a signal. It doesn't mean we have a trade at this point, okay? But we'll keep an eye on it because NVIDIA does influence how we trade the NASDAQ futures. One other thing to monitor on the NASDAQ futures is the top 8 large market cap weighted stock. Now you can go with top 10. I just have enough real estate on my screen here to do 8, okay? And the thing that we monitor, okay, in the pre-market and around the market open is where are all the stocks trading, plus or minus, on the session or in the pre-market. We start to get a feel for whether they're up or down, okay, whether things are more bullish or bearish by their positive or negative number. But as you accumulate the numbers and get familiar with, well, what does it mean when Tesla's up $7.51? Is that big bullish? Is that bearish? Or Apple's flat, Broadcom's flat, Nvidia's flat, and Amazon slightly up, Meta slightly up. Okay. As we watch and monitor those, we need to see if the stocks are reflecting what the futures are doing. Okay. Now, I want to point out that stocks move first, exchange traded fund moves second, and then the futures get adjusted. Okay. Over time, you will start to realize that, hey, you know what? Futures are way up. Let's just, for example, say futures are up 60 on the NASDAQ, but the stocks all look like this. Okay. You're going, wait a minute. The stocks are not supporting where the futures are. Now, the futures tend to go trade at a premium and also trade at a discount relative to the cash market. What is the cash market? Well, the cash market is the stocks when we're looking at the equity indexes. So we're always going to monitor the stocks, and especially around economic reports, because we want to recognize whether the volume is light, heavy, or just normal, okay? Very light volume ahead of an economic report implies bigger whipsaw action on the futures. And it takes about 10 or 15 minutes for the stocks to show you whether they're going to be going with that original pop up or pop down on that, okay? So anytime you have economic reports and things like that coming out that may impact, along with the light volume, may impact what your futures are doing, okay? Be prepared to look at the volume using the Dow 30 as that odds enhancer there and get a feel for it, okay? We do have a zone down below. We also want to recognize where price is trading right now relative to the session open, okay? Or, sorry, the 5 p.m. close, okay? What we observe and what we watch for here, okay, is if price opens inside the prior session's range, we have a high probability the gap will fill the same trading day. Since it's an outside day meaning price broke the prior session's range, but is opening within the prior session's range, probability of a gap fill is right about 75–80%. If price is still inside the prior day's trading range and not broken the high or low, probability of a gap fill is between about, well, let's just say 85–90%, okay? Now, if price is going to come back and fill the gap, we got to find a way to get into it, okay? We also have a direction, okay? So if price is going to come down, we need to look for a way to get into it, okay? It's not just click the button, okay? So we're keeping those things in mind as we are gathering information about the equity indexes, okay? We're going to monitor the stocks in the pre-market. And you can I have a watch list of the top large market cap, the 8 that I'm watching. I want to see if they're bullish or bearish or, you know, up or down on the session and how much. I'll take that as an accumulation, kind of watching it, and then assessing our futures. Well, over time, you will be able to assess whether futures are overbought or oversold. For the Dow, for the S&P and the Dow futures, we take an equation using the Dow 30 as an odds enhancer. The Dow is the only price-weighted index. All the Dow stocks trade on the S&P 500 index, okay? And as that, the Dow and the S&P are more highly correlated than the NASDAQ and the Russell, okay? Now, to see whether S&P futures are overbought or oversold relative to the cash, okay, is another good piece of information. If futures are overbought, then we're looking for a supply zone, and we're looking for cash and futures to balance out. They most often balance out shortly after the open or near the close in the last hour, hour and a half of the trading session. To do that calculation, we take the number of Dow 30 stocks that are greater than 94 cents positive, and right now we have 6. Then we take the number that are negative, which were 0, okay? So the net result is we have positive 6. We take that number and multiply it by 2, and we get a value of 12, okay? So in this statement, cash equals positive 12. We compare the cash value that we've calculated, compare it to the net change on the futures. Cash equals positive 12. S&P futures are trading at positive 6. Now, the result of that information is that futures, S&P futures, are oversold relative to cash at this moment, okay? This is always moving. So when when futures are overbought or oversold, we start looking for that trade opportunity, especially around the S&P being overbought, oversold greater than 4 points. We need to find that demand or find that supply. If price drops down, if price falls down and gets that gap fill early in the session, okay, futures will become oversold, dropping into demand. We get our gap fill, and we have to anticipate that price will bounce off of that, okay? So I want to revisit a smaller time frame, kind of identify where that zone may come into play, okay? Smaller time frame may help us get into the trade and manage our risk a little bit better. This is our gap fill. This is the origin of that strong move. This is where there were no more sell tickets and buy tickets only, okay? Now the reaction candle, yeah, we got a good reaction off of it, but we did leave a little footprint down here, right around the gap fill, okay? Around 6,085, 3/4, okay? So that's where I'm going to look for a long position if we get the gap fill, which has a high probability of doing that, okay? All right, looks like nat gas, the open range breakout is working for us, okay? And crude oil, yeah, we're still doing okay on that. We need a little more help from heating oil and gasoline to push things up. Our intent for this and targeted range is going to be this little leg base, a speed bump area just above the Globex high. Okay, so I called this area a speed bump, which is an area above the resistance area that is an obstacle where we might find some leftover sell orders. Okay. Now, if you're watching our live stream right now, we are doing a showcase around 11:30 Eastern time today. So I'll be doing a second live stream, and we'll be talking about that group of candles. Okay. I'll show you what the group of candles looks like. I am a strong believer that you must verify the information I'm sharing with you. Do not just trust it at face value. So I'll give you enough information to go back and look around and say, okay, when we have that leg base group of candles, like there's one right here, what does it really mean? Okay, well, that leg base group of candles, 87 out of 100 times will get a bounce. The leg base group of candles is an area where the potential of unfilled orders is still sitting. How do we know that? Well, each time that we see price making a leg base group of candles, we see that price changes direction. Kind of cool, isn't it? Having the leg base over here and price change in direction. Okay. Now, not every leg base is a trade. Okay. We got to make sure that it's in the right location. But 87 out of 100 times, when you find that leg base, you'll see that it is at a place where you most have desired to take a trade. Okay. So we're going to be covering that later in the session, not this session, this is our live trading room. Okay, but we will be covering that in a live stream later today, starting about 11:30 a.m. Eastern. Okay. You can refer to the website, check our calendar, and see the upcoming courses, classes, and things we have going on with that, and little showcase things to help you with getting an understanding of what we do. Okay. Forex, yeah. Let's just take a quick look at that. Oops, stopped out on that one. We do the same method and approach on Forex markets. Okay. I primarily trade futures. Okay, that's just what I trade. But the methodology and the approach works on all products. Okay. We're even doing this on crypto. And we had a really good trade or potential trade here. Textbook setup. Okay. See, all of this information on the left-hand side of the chart showed the opportunity at a breakout point. Okay. Now this is Bitcoin. We had a leg base group of candles. The breakout trade was a potential trade. And then we have a demand zone entry. In understanding supply and demand, you have to see that the big banks and institutions don't do things on a whim, okay, or just thought. Everything is carefully planned out. Information on the left-hand side of the chart helps us anticipate when and where supply and demand is going to be most effective. These levels of forecasting will be the next levels that price runs up to. We had a forecast right to this point, and it came back down. So I reset everything based on the swing we had up yesterday, and looking forward to that next move to the upside on that. Okay. So I will cover some more of that in our showcase, and if you'd like to do some, and Harry, you see a question. If you'd like to do some FX examples, I'll get some prepared and we can look at that as well. Okay. Great question. I trade futures mostly. And the main reason I trade futures in the live trading room and things like this is to show that our method and approach works. Okay. And it works for multiple assets. All right, let's come back out here. Let's see where we're at here. Yeah, Dow came right down and touched that top of the zone. I believe this zone can be used twice, so we're going to look for a second touch of that. Okay. Other products, there goes our Japanese yen. Did anybody get into that? See, Harry, if you notice the picture right here, I'm playing the yen, and you probably on the yen USD or USD yen, you would see price going opposite direction. Okay. But this looks a lot like our Bitcoin chart. We had resistance, our buy territory, We have our demand zone, and the trade we took was the opportunity at the breakout. Since we have an obstacle along the way, which is our speed bump area, okay? I'm anticipating with the leg base that there may be some unfilled orders at that area, okay? Let's jump back out to our euro chart because I'm still in the euro as well. ECZ 24.
Stop filled.
Yeah, a little bit of whipsaw on that. Like crude oil pulling back too. Let's get. Okay, our stop is in place. And notice over here, this is my heating oil chart. I'm just going to smaller time frame. Heating oil pulling back. Taking a look around at our equity indexes. For each of the equity indexes, we also measure the Globex range and compare to the daily ATR to see if the range is narrow, wide, or in the middle. Narrow range generally means we'll have a more trending environment. Wide range, we'll look for the bull bear trap. And with a middle range, okay, we will look for kind of a choppier session open. Looks like we're getting a good move down on Russell. Did you stay with that team? Yeah, looking for that gap fill. Yeah, the team had taken a trade on the Russell earlier in the session. Hopefully they're still with it. It's a nice pullback. And taking the heat on the crude oil. The stop is in place. And I will look to go back in if we start moving up. Okay. Let's go out to a larger time frame on the crude oil. Larger time frame, 60-minute chart has a support level, but also has a demand zone down here. Okay. That demand zone is located within our buy territory, but it is a higher time frame support area as well. So the possibility of leftover unfilled buy orders is pretty strong, and I'm looking at that. Let me put those little blue dots on it. This might be a good one here. Got the leg in. We have that zone here, leg, base, 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 leg out, base. We also have this one, leg, base, 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 leg out, base. So we have two levels, two zones that qualify on this 60-minute crude oil chart. Okay. Now, when determining which zone will be used, we look at how price leaves that. If we have big leg candles leaving the zone, they're bigger than the one inside, we're going to look for price to go a little deeper. Okay. If the leg candle leaving is smaller than the leg candle in the zone, okay, we're looking for a proximal line entry. Okay. So with that information, using the leg base group of candles, on this higher time frame, crude oil, we are going to target a proximal line entry right around that 67.07, and we will make our stop loss 66.62 for a bigger time frame trade opportunity. Okay. So important to know all the small details about our method and approach. Okay. Just getting to know the leg base group candles is pretty exciting because you start seeing that information is around. Are we Bitcoin rocking? Nice. Okay. On the 5-year, 10-year bonds and notes, we see that the breakout trade is underway. And now we have a fresh buy territory. Now, just keep in mind, you've already missed the breakout trade. There's no time to get into it, okay? What we look for now is where is the leg base inside the buy territory, okay? So breakout trade is off the table. We missed it, okay? And now we're going to look for supply and demand, okay? So price has to pull back to find that demand area, the origin of this strong move up, okay? Looks like indexes are still moving slightly higher. Let's get back out to those small time frames. I'm not sure if Jason is with us, but yesterday we had a really great time in our community trading room. Jason pulled up his charts and we broke down on the NASDAQ, broke down some pretty small time frames, but we ended up finding a leg base zone around 21,557, 21,567. Yeah, it was Frank, right? Yeah. I'm not sure if he's in with us today. So we are right now just below a pocket of points. Okay. We have economic data still coming out. Consumer sentiment at 10 a.m. Keeping in mind that at 10 a.m., 85% of the time the market will change, the indexes will change direction. So let's kind of map that out. When would we like price to arrive at that supply zone? If it arrives on the quarter hour or top of the hour at 10 a.m. Eastern, okay, that would give a pretty good place to look for a short trade. Okay. Taking a look at the stocks, I'm using a small time frame just to see if there's momentum behind the stocks that will push the Qs up and ultimately push the futures. Okay. So as we're using this small time frame, we can see Apple's up, Broadcom's up, Nvidia kind of chopping sideways. Tesla giving back some of the gains over the last few days. Not much of it, though. We're seeing Netflix getting a pretty strong move after a drop at the open. And Microsoft still within its trading range, okay? So with the information I'm sharing here, we got 1, 2, 3, 4, 5 that are pushing. Yeah, 5 that are pushing up, and Nvidia and Tesla just getting a small pullback. The pocket of points, which is the information over to the left-hand side of the chart. Pocket of points and dead space together typically mean that we're going to have an easy price movement up to that supply zone, okay? We use information on the far left of the hand of the chart, left side of the chart to help us anticipate when to stay in the trade longer. Pockets of points, overlapping dead space areas tend to give us some pretty consistent moves up. Now, it's not a place to enter the trade, okay? We just had to break out. We have a new buy territory down below, and we'd be looking for a pullback into a demand zone, okay? So you'd look down and left and try to find an area, depending on whether we made a higher low or a lower low before price took out the sellers, okay? And we look for that range. Looks like we have one pretty close right here. I'm just going to eyeball it there. We also missed the breakout trade on the NQ. And we're looking for a demand zone entry around 21,503. Now, keep in mind, as we come back out to the higher time frames, okay, we're expecting a gap fill. So the opportunity to go long and the opportunity, high probability of a gap fill is still in play. 15-minute chart on the QQQs is running into a rally-based drop. We may find some unfilled orders right in that range. Okay. Remember, the Qs are going to move before the futures. So why are we getting just a red candle right here? Well, they're deciding if there's enough sell orders here pushing price back down. Okay. Daily chart on the NQ still looks pretty bullish. Okay. No pullbacks yet. We had kind of a couple of basing candles. Okay. A little pause yesterday. We're also looking at the average distance that price moves away from that 50 moving average before reverting back to the 50 moving average. Okay. So there's a lot of information that we put together. Okay. Now, the information itself does not make the trade. It just helps us gauge the risk. Okay. It's like standing on a street corner and looking both ways. Okay. Why do we look both ways? Well, we're assessing the traffic, the volume of the traffic, all those many pieces of information to see if it's safe to engage. Okay. Well, this market went quiet already. All right.
Order filled.
What didn't we get? Oh, we got Japanese yen. We're still in the euro. Got stopped on that gas. Okay, so the open range breakout took price up, pulled back, and I took a $60 loss on that trade. Okay. I had a trailing stop on it. So I'm going to take the open range, break out there. I still anticipate price to move up on nat gas based on the price structure. Okay. Should price move back down to demand, I will also look for that opportunity. Actually, it's just a leg base when the big players came in. So it is not necessarily a demand zone until price takes out the sellers. Okay. I want to be clear on that. Okay. So price pulling back down to the 3.018 is going to be a little more elevated risk until we line up with a demand zone, which is a little bit lower, right about that 3.00 or 2.999. Okay. See, when I pointed out this leg base, it was going to help me make a choice whether to go long or short on the open range breakout. Okay. If you're going to be in a trade for the session or the here, we need a good entry in a demand zone within a buy territory. Okay. So there we have it. Okay, a little whipsaw. What's the dollar doing? Dollar got to move back up. But the 2-year yield is not bouncing here. Okay. So I'm leaning on the 10-year and the 2-year yield. If they start bouncing up, then I definitely need to jump out of the euro trade. Okay. If they continue to move down, we got more upside. So it's kind of that decision point. Let me refer to that chart again. Okay. What's causing the uncertainty right now is the dollar is getting a bounce back up while the 10 and the 2-year yield are still pointing lower. Okay. That discrepancy often can imply, and we've seen that discrepancy ahead of news, economic reports. Okay. Look, all information is given to the media, all these breaking economic reports and things like that. The media has that information up almost 45 minutes before the session open. Okay. 45 minutes before the session open. Oh, sorry, before the announcement. Excuse me. My mind's going a couple of different directions. So things are already priced into the market. As we approach that time, we need to be aware of that reaction. Okay. So as we're monitoring the dollar, 10 and 2-year yield, okay, when they're not all correlated, I've associated that, as I've been studying it, with some pending news that may be going to be kind of volatile for the markets. Now, I need to pay particular close attention to that, because if the dollar shoots up off of that consumer confidence, and what's the other report coming out? Yeah, the consumer sentiment. Okay, and then right after that, we have a Fed speaker. Okay, so if the market, or if the dollar shoots up or down, that's going to have a direct impact on what my indexes are doing. Okay. So it's not just one thing that moves the market. It's multiple things. Okay. All right. So we're still in the yen trade. Crude oil coming down. Yeah, took out that small time frame zone. Not really getting a big bounce on heating oil. Let's go out and look at heating oil for a moment. Okay. So we do have another area right below. Now, what I wanted to look for is, where do we have that next level of support? So if heating oil were to break down and touch that support, okay, we might see a bounce. I had a very small time frame area where we could potentially see a bounce based on the leg base. We saw a proximal line entry. We got a bounce off of it once, and price now has come deeper into the zone. So some of the clues about that is looking at the leg candles in the zone. Okay. So as I exploit this a little bit more, we start looking at the leg base group of candles. That's way too big. Okay. You have to adjust your tick frame up or down, but once you start get the leg base, you're going to look at the leg candle leaving. If it was bigger, then you're looking for price to use the zone twice, okay, which it has done. First test is generally a proximal line entry, and the second one is a deeper retracement zone entry, okay? So we need heating oil to move up in price, and then crude oil may be getting a bounce as well. Hi, Matt. Let's do that. Let's go take a look. Hey, thanks for posting in the Discord room, Matt. I love watching your charts. Let's see, Tesla, you're looking at a long entry, 352. Oh, look at that. Okay. And what time frame were you looking at that? 60 minutes? Oh, yeah. See, Matt's one of our students that is learned how to use this with his stock portfolio each day, taking some small trades. I'm walking you right now through our 5-step process. We find our resistance. We find our buy territory. We made a higher low. So we're looking in this area, the origin of this last move up. You have to adjust the time frame to get the leg base, okay? But we're looking, I'm gonna kind of spot it right around this area. Let's drop down 59 minute. 58. Let me put those little blue dots on here. See, I want to point out that, you know, after students take the course and class, okay, they're calling the same zones and same levels as the instructors, okay? Now that's important from a teaching perspective, okay? Because we want students to be successful. All right, I'm pretty close. Matt says 3:52:97. I reduced down to a 57-minute chart, Matt, and I was able to kind of trim that leg base, trim it up just a little bit more. Now, recognize we did miss the breakout trade. And once you start to recognize that you missed the breakout trade, and if you're a supply and demand trader, you simply just have to wait for price to come back down to demand. We have two places we look for trade opportunities. If we have our 3 touches of resistance, a little higher risk, we look for a breakout trade. Then we look for a price to pull back and pull back to that demand. And we'll see if there's any leftover unfilled orders at that point. Recognizing that a breakout trade must occur first before you have a supply and demand trade. Okay. And we anticipate price to continue. Okay. Great job, Matt. Always a great job. Thanks for posting. And we try to tackle all the questions as we look at the live trading as well. Whoa, a new high on S&P. Woof. How about our NASDAQ? Did we get up there? Ooh, blew right through that area. Something the Fed said? This market is getting way hot. All right. Again, on the NQ, we have missed the breakout trade. Okay. We are still collecting information. Look at that ballistic move on the Qs. Let's take a quick. Okay. So I'm going to add a 50 simple moving average to this. Might need to go to a smaller time frame. Let me use a time-based chart. Okay. I'm going to do this example here on the NQ. Okay. I'm taking these last 3 swings in price that I'm outlining right here. And if you want to know the range of those swings, just you put a 50 simple moving average and you get the peaks and valleys, okay? Or you can use the structural pivot turning points, okay? So what I'm doing with this is I'm using a Fibonacci extension. Now this is a ballistic move, and it's, look how steep the slope is. This is also looking like a V top coming into play, okay? So we use Fibonacci price extensions, 314, 2618, 224, 1618, 127, and 113 as we extend up on each one of these swings. And we're looking for a confluence of levels to kind of match up. All right, so we're right in that range. Right here. Look at that, it just took out several small levels, okay? So we are looking at the Fibonacci extension for this last move. Oh, I want to get that one here, right like that. And we're at a pretty big extreme area, okay? This is where we had the confluence of many levels matching up. A V-shaped reversal, okay? We have a couple of different pictures that we look for. We have the X point and we have the Y point. And we have A. A will equal one of the Fibonacci price extensions, either a 224, 261.8, or 314 extension of X and Y. Now remember, we're still expecting a gap fill today, aren't we? We have a high probability to expect the gap fill. Okay. So with a V-shaped reversal, often the first pullback, the B point will be back down to B equals 78.6 retrace of the prior swing, Y and A. Okay. At that point, we often have a small, shallow retracement, generally no more than a 1/4 of the move. Okay. The exact number that we reference is a C point equals 23.6 retracement of the prior swing, which is A and B. And then we look at the follow through. For the D point, okay? So with a V-shaped reversals are kind of tricky. And if you have the Bible book, it basically the textbook for chart patterns, okay? Technical analysis is what is it? Technical analysis of the futures market is the book, and it's by John Murphy, okay? Kind of the Bible of it. What his words were about the V-shaped reversal is that the V-shaped reversal is most easily recognized, and get this, after it's complete. Couple of things that we look for on the V-shaped reversal, whether it's to the upside or to the downside, okay, is when we have a strong move down and we get multiple small touches close to that small move down or move up, 3 touches minimum. Then we often get that drop, okay? We had multiple touches down here at this support, okay? And this is the inverse of that. So the V-shaped reversal, we'd be looking at this point as X, Y, and A, okay? Now, the Fibonacci price extension tools, they help match us up with an area, and you kind of look in that range, okay? And we're right at the 10 o'clock reversal, so one more push right up into that area. I might just roll the dice on a couple of micro contracts here. Just for giggles and grins, try to pick a top, okay? But I'm gonna do it with a very small amount because I'm anticipating that V-shape reversal.
Order filled.
Okay, so let's get one more squeeze of the shorts. And this is a high risk, okay? Look over at the Dow stock or the stocks over here. Are they still looking like they're just going to keep blasting to the upside, or are they starting to show a little weakness here? Okay. I think we're gonna have one more squeeze. $21,623. And then I'll have my stop at 35. I'm just taking 3 little micros. Why am I taking the risk though? What's one thing that's standing out based on statistics? Okay. The possibility of that gap fill. The V-shape reversal. Okay. These are techniques that we don't usually talk about or teach here in the live trading room, but hey, the environment is here. Okay. The environment is here. So let's watch the cues. Are they starting to show a little bit of weakness there? Oh, it looks like the micro shot up there a little bit faster. Okay. So with my 3 micro contracts that I took, okay, you got to have a little bit more wiggle room because the volume on these micros is pretty small, a lot of whipsaw. I currently have $67 worth of risk on this trade, and I'm going to leave my stop loss right there at 35. We just went right up to that 314 extension, which is a very big extreme. Okay. Price ran up, and now we're anticipating a 78.6% retracement. See, we're using structures and patterns as kind of a roadmap to help us manage our risk and our expectations. Okay. And from this point, as we start to view the next trade setup, we're looking at, hey, the possibility price moving down to the 78.6% retracement, ultimately looking for the gap fill where we have a high probability of that. Okay. Based off of the information we discussed earlier. Okay. This is where I anticipate price to go to off of this when we start, or sometime today. Okay. So now we just have to accept the risk. Okay. What is the risk? Well, that's the difference between my entry and where my stop loss is at. I currently have $67.50 of risk on the trade. Okay. If you're looking at just a short 1-to-1, you have it right now. If you have the ability to visualize the right side of the chart ahead of time using patterns and structures, you can assess that risk, not only just using the price chart, but the things outside the price chart as well. Okay. Pretty cool stuff, isn't it? Now, how would you like to know when it should arrive? We'll save that for a later session. Okay. We still need to take out a couple of these little higher swing lows. That'll give us a little more of that momentum. Tesla's moving down, NVIDIA moving down, and Microsoft moving down. Netflix, not a big move down, but now we need what's going to support this trade? Okay. Well, we need a pullback on Meta, Amazon, and Broadcom. And Apple, if they start pulling back, then the momentum is going to start to pick up. Monitoring the QQQs, the exchange traded funds, we also monitor, kind of like using stochastics here. And you could put stochastics on there if it makes it easier for you. But we're looking for each candle that is forming to close lower or higher than the prior close candle. Okay. Once price starts closing lower than 50% of the price or higher than 50% of the prior candle, okay, we start to see that the people that use stochastics are starting to see a signal to buy or sell. Okay. Okay, this is where we had some buyers before. We'll see if they're still stuck there or sitting there. If there's no buyers there, then price will go down to its next little pivot point, and we'll continue to look for price to move all the way lower. Okay. Now, if this trade has already met your profit target and your goal for the day, close it, get out. Okay. Do the happy dance. It's Friday. Okay. Right now, we've already got a 2-to-1 move away from that area that we projected. Okay. Our expectations are the gap fill down here, but that may not happen right away. We have to be prepared to still risk our $67.50 on the trade. Okay. Once we start taking out some of these pivot points, you need to have a plan and how you will adjust your stop loss. How are you going to manage risk or manage your profits? What information outside the price chart are you going to lean on to see if we still have further move lower? Okay. Monitor the cues and so on. Okay. Yeah, Apple's still moving up. NVIDIA's been one that's been higher correlated to how the markets or how this index moves. It's when you start rating all of the stocks that I have up here and see which one has the largest market cap. Okay. So you're probably looking at Tesla, NVIDIA, and Apple, but Broadcom is close there too. And we're getting another push up on Broadcom. The large market cap stocks impact the index more than the smaller market cap. These are the top largest ones, but within that large group, we also want to pay attention to which ones are influencing that price action. Okay. All right, I'm going to risk my $67.50. If you don't want to risk your $67.50 on a couple of micros, then now's your opportunity to step aside. Okay. All right, let's get back on track here. How are we doing with some of our other products here? Wow. Make some adjustments. See, according to Stock Traders Almanac, this is the wrong time for the Santa Wrap, which they're touting a lot. Okay. Okay. Generally, we see a pullback before the options expiration. Next week, we do have contract rollover. Okay. We have a lot of economic reports. When you take a look at your economic reports, you're not only looking at what's happening today, you're looking forward about 7 to 10 days, okay, to see what's coming down the pipeline. Some economic reports have a multi-day impact on the market. I'm watching the Russell here. And then come on in, Q. How about the S&P? Did we get a VTAP? No. But look what we broke out of that sell territory. And with that, sorry, maneuvering around coffee and charts here. And looking at this resistance area now, we're getting an accumulation of orders up here. Okay. We're still expecting the gap fill and price to come back down. Watch how this starts to play out. okay? The SPY, very strong move, and it's holding a high, tight base, okay? Often when a price does a very shallow retracement, it still has momentum to the upside, okay? But when we use the information or potential in the picture, we see that this was a bull flag. And maybe this is another bull flag. What do the bull flags tell us? Well, bull flags are continuation patterns. The trend in is a trend out. But with continuation patterns, 87% of the time, the next pattern that forms after continuations is a reversal. So I'm not giving up on the gap fill. Okay. I need to see before I start getting very bearish, I need to see a reversal pattern, price either building a support right at this resistance area, then breaking below that. Okay. So it's not like we're jumping in a trade. So please don't take, if I'm taking a trade, I'm giving you the exact steps that I'm looking at. There's my risk on it. Okay. So for those that took your quick 2-to-1, nice job. I stayed with it. Looks like we're getting a little more of a squeeze to the upside. My stop held for me. Okay. If you didn't like that little squeeze, didn't take out our stop, but it got close. But if that made you feel uncomfortable or bad on a Friday, you need to get out now, okay, and wait for your next opportunity, okay? And that's not a trade recommendation. It's just an emotional thing that when you get into a trade and you see it successful, and then it goes against you and you weren't really prepared for the loss, okay, that can really mess up the way you see things the rest of the day, okay? Make sure you fully embrace your protective stop loss by acknowledging the dollar amount that it could be, okay? That's why I mentioned $67.50 on 3 micros, because I want to be aware that that is the amount that I'm risking, okay? All right, gold hanging out. Our equity indexes. Let's see here on the Qs if it's done. Yeah, I'm going to use a Fibonacci extension just to see if it ran into anything there. See, I'm now waiting on the Qs for price to close lower than 50% of that prior candle. See if we're getting any potential reversal. Price holding the 1618 extension, okay? Now, when you want to forecast the right side of the chart, Fibonacci price extensions do help you anticipate what that next move is. With a 1618 extension and price holding that, I would automatically start thinking about an inverse a head and shoulders pattern. And very often you see when you have a head and shoulders pattern, the right shoulder price extends up to the 1618 extension. Price then comes back down to 178.6, and we get to start building the right shoulder, okay? Price closing above the 1618, we would then start to anticipate a V reversal at the 224, 2618, and 314, okay? So right now it's a decision time. If price closes above this, your stop loss needs to be in place because the next stop is quite a bit higher, a potential big squeeze to the upside, okay? But that squeeze to the upside in that area often leads to a sharper pullback, possible V-shaped reversal. We're constantly using shapes and patterns to anticipate where price may change direction. We're looking to the left to find a leg base group of candles. Boy, look at this. NASDAQ is rocking. Dow's dropping. Russell and the S&P have started going sideways for a little bit. Okay. Each time you make an assessment of your exchange traded funds, of your indexes, take a note of what time of day it is. Okay. What economic reports are still pending, who's speaking, because we do have a Fed speaker coming out in about 14 minutes. Okay. Russell continues to look for the gap fill. Oh, nice little chart on the Russell here. Notice we have the multiple touches of the resistance area right here after a price moving down. This is what we just referenced to, which might give us that potential V shape or drop back into that demand. Okay. When you have multiple touches of the Fibonacci where the sellers are located, if I'm going too fast through here, I'm not taking a lot of trades. Okay. I want to illustrate what we're looking at. Okay. The live trading room was never meant to be where you just come in and get picks and start trading with the instructor. It's meant for me to show you how the method and the approach works. Okay. Doing some live trades, you kind of get a little more confirmation of what you were seeing on the price chart. You start getting more comfortable in learning how to trade it. Okay.
Order filled.
We get stopped out at NASDAQ. Yep. Okay. So being stopped out doesn't mean I did something wrong. I had a plan and I managed my risk. Okay. This was my plan. The market had other plans. Okay. I did not have a place to go long. I had a place to go a potential short, an aggressive short. Okay. Based on price patterns. Okay. Once it has violated your stop, you are now back in waiting mode. Remove the information on the price chart. This is no longer the map that I am considering, and just get rid of it. Now, if it started playing out, then I would leave the map on here. Okay. Yeah, I'm one of those typers, I can't talk and type at the same time. But we can see that we are getting to an extreme, okay? And each of the pullbacks never came back down deep enough for me to get into that move to the upside, okay? Odds enhancers, Broadcom, still moving up. Meta moving up, Amazon moving up, now Microsoft coming, and we can see the Tesla and NVIDIA coming around the far outside. Okay. Nice there. How did crude oil do? Whoop, crude. Oh, wait a minute. We're right there on crude. I need to go back out to the larger time frame on the hourly chart. Dang it. Hourly chart hit our zone, so I'm coming in late on the crude oil trade.
Order filled.
Okay. And then I will monitor closely looking for a bounce on heating oil in this range as well. Let me come in and place my protective stop loss. I'm going to use the low of the session here, the leg base, 6707. Now I'm basing my entry and aggressively going after it here, based off of what I saw in the hourly chart. Okay. Which is right here. This was our potential entry. In this example, we had two leg base that overlapped. When you have two leg base overlapping, you evaluate them individually. The upper one, the leg candles leaving were bigger than the leg candle in the zone, indicates the price will go deeper into the zone, which it did. Okay. The lower zone, leg candle leaving, was smaller than the leg candle in the zone, often is only a proximal line entry. Okay. So that proximal line entry is what I took an entry off the proximal line, but also with the upper zone. Now they overlap. I went right for the middle of that. Okay. So managing your risk, stop loss is going to be about 66, 62 on this. You need to give it a little bit of wiggle room. Okay. That's off the hourly chart. Watch your time of day. Anticipate more volume and possible bounce closer to the quarter hours. Boy, Aussie went the opposite direction. That gas got a nice move off of the demand there. Let's see. 67, 67. No, I'm gonna come in there and just kind of watching crude here for a moment. Wheat came back down to our zone. Yeah, dollar must have started ripping back to the upside. And it did. But the dollar ripping to the upside is causing an impact on the FX market. We can see on the hourly chart, price moving back up. We might find a little supply about that 106, 111. But boy, these 10-year and 2-year yields, they are just not getting much of a bounce. Okay. All right. So having said that, we may look for a demand zone entry back down here at 105, 497. I lost track of what I was looking for. Wheat. We're trading the March contract, WH25. I want to take a quick reference of the demand zone where we have the leg base group of candles. Reason I'm going into looking for that leg base is I want to see if this is a proximal line entry. We can see that leg candle there is smaller than the leg candle that's isolating our zone. Should only be a proximal line entry, which we're a little bit late to.
Order filled.
And I will not expect price to go too deep into the zone, 553 and 28. Okay. Back out to a larger time frame. Yesterday, we got that pop up. We got about $400-500 on that breakout trade. Okay. Yesterday. And now if you're looking at this will be covered this weekend. We have a speed bump. And we just had price testing the speed bump. Okay. So what that means to us is that now we're looking for price to either stop us out. Okay. If we have a tight stop. Okay. At the low of the session, because we're not expecting price to go too deep into this zone. Okay. We need to look up and left and find where we have an opposing supply zone. Okay. Here we have our support. And we have a small sell territory. Price making a lower high. We'll anticipate that range there. I'm not going to take the time to adjust the stops. We're getting ready to wrap up our session, or sorry, I'm not taking the time to break down the time frame to find my zone. But you can look in that area to find that opposing zone. Okay. So we had an accumulation of buy orders. We took out the sellers that were pushing price down and the buyers ran. And now we're seeing price pull back into a demand zone. And my intent is price moves up to this target. Okay. So manage your risk, break down the time frame, get the exact picture. All right, so we have wheat, euro. NASDAQ continues to move up. No shorting that right now, no short setup. And it looks like the S&P is about ready to push a little higher too. Okay. So I hope you enjoyed our session today. There was a lot of little nugget pieces of information. You want some more nuggets, look at our YouTube channel. We will be doing a live stream in about 1 hour. And we'll be covering some of the details of looking to the left and why we looked left to find the leg base group of candles. All right, so let's go back out here. I'm still expecting the gap fill today, which is, oh, I don't need to move that one. That's the prior session high, but I need. Wow. Whoa. And you say, I love my stops. Yeah, as far as the forecast on the NQ, the next level, we're looking at potential for the Fibonacci extensions. Wow, breaking 22,000 on the NASDAQ. Makes you want to jump in and buy everything right now, doesn't it? Or are you going to be waiting for a pullback just like everybody else? Dow and the Russell tend to be still remaining quiet. Okay, getting some small moves. Complacency back in the market. We know that there's a topping or reversal pattern imminent when we get the VIX this low. Okay. So I'm just playing heavily defensive, and I'd love to catch that first move. I know it's getting close, but this is not a time to pick tops. If you have a very specific reason and a very small risk to try picking a top before price change direction, and that's part of your trade plan, by all means, okay? But don't get in the habit trying to pick the top the rest of the day. Wait until we start getting an accumulation of orders, okay? All right, yeah, the crude oil from the 60-minute chart. I'm now looking to come back in on that as well. All right, I'd like to thank everybody for joining us in our live stream. If you want to see what we're doing with the Lake Base group of candles and why we choose the levels we do, join us in our live stream at 11:30 a.m. Eastern in just about an hour's time. Okay, trade safe. Don't be picking a lot of tops today. Wait for that setup. Okay. If we get a good accumulation of orders, and oh, wait a minute. One more little thing that we talked about yesterday. We had this this price pattern, right, like this. And yesterday we were expecting to pull back before an extended move. And we had that topping pattern right here, basically the same thing. Price got that a little pop up and then came back down. And so we're looking at these little price patterns that do indicate, you know, it almost feels like it's going to roll over and then it just shoots up. Okay, so we've had 3 of them now. Okay, we're at all-time highs. You can use Fibonacci extensions to forecast, but be very careful. All right, love to see all of you come and join us in our and the Zoom link is in the chat right now. Did we post it on the YouTube channel as well? That would be great if we do. And we'll see you there in about an hour. Everybody be safe. We'll do a little more trading while we're doing our presentation as well. Have a great trading day, everybody. Be safe now.